I think right now, first-time homebuyers have a great opportunity to get into a property that they really like. As long as they're comfortable with the payment, I do think there's going to be an opportunity for them to refinance in the next 36 months. But compared to the last 2 years, uh, when there's 30 people competing for a house, the chances of you actually getting a property that you love and negotiated good terms is a lot tougher. According to Redfin, in 2022, 40% of buyers received a seller credit towards their closing cost, where 2020, 2021, that just was not taking place near as much because sellers could name their price based off the low inventory and the amount of buyers that were out there.
What's up, guys? Welcome to another episode of Invest Iowa. Today we have Louis Wickett with
Key Mortgage Group.
Key Mortgage Group, and today we're talking about first-time home buyers. How to get your first property, what options are there available, what financial terms can you discuss, and we're gonna go detail into and to describe all those things that as a first-time home buyer you should know, right? But thanks for coming, man. I appreciate you.
Absolutely. Thanks for having me. I'm really excited.
Yeah. So, what in those conversations that you have with first-time home buyers, how do you start?
Well, a lot of first-time home buyers, they have someone in their ear, whether it be a parent, a friend that just bought, relatives, and it's just slowing down the process for them a little bit. Take a step back. Let's talk about your goals. Let's talk about your needs, your wants, and really dive into what's important to you, because you don't know what you don't know. Most people just think with mortgages, all you think of is rates, and there's so much more to that than rate. Whether rates are at 2% or 6% or 7%, if you're not comfortable with whatever the monthly payment is at that rate, you shouldn't be buying the house. And I have that conversation with a lot of buyers that rate does matter, but it's not everything. And there's a lot more we need to dive into to make sure that I understand your goals and I can explain everything to you. And I really spend a lot of time on education and providing value up front for my buyers.
What do you say to when somebody says rates are too high, I'll just wait until they go lower?
It just depends on their situation. Are you renting? If you're renting, let's talk that through. How much are you paying in rent? Because if you know you're going to be in an area for, a long period of time, let's just say Des Moines or West Des Moines, and you can qualify to buy a house, it might not be bad to look at buying. But I'm not going to sit here and tell every buyer, hey, you need to buy right now. It's the right thing to do. It's different for every situation. So rates are what they are. We can't dictate that. I think that's important to explain to the buyer. The payment might be within your comfort zone, even at a higher rate. And for example, in 2018, a lot of my buyers refinanced from 2018 to 2022 within that period. So there's usually an opportunity to refinance, lower that rate, and lower that payment for the buyer at some point. It's not promised, and I'm very clear on that. But there is opportunity down the road, hopefully, to look at refinancing. But if your goal is to own a home for 3 years, rate's not the most important thing. Is it a value-add project that you can put a little into, build equity during that time? There's a lot more things to look into than just interest rate.
Now, so you touched based on a lot of things that first-time home buyers are not going to know specifically what you mean. So let's try to dive into those concepts. So how do you define FHA?
FHA, it's a government-backed loan, 3.5% down. It's a great product. It allows for a higher debt-to-income ratio. It allows you to get into multifamily for a low down payment compared to conventional. If you try to buy a multifamily home, you're looking at 15% down compared to 3.5%. If I could go back to being 21, 22 years old, I would, if I'm a single person at that time, or even if my spouse is comfortable with it, I would buy a multifamily property with an FHA loan. I would buy that property, let's just say a 4-unit, buy that property, live in a unit, rent out the other 3, and as tenants move out, I would move into those units, update them, and keep doing that cycle. It's a great way to build wealth, but not everybody's comfortable living in a multifamily property either. So It's not for everybody, but it is a great way to get into a home with a low down payment.
Now, what's the difference between FHA and VA?
So VA is for veterans, both backed by the government, but you have to be a veteran and you have to qualify for a VA loan. VA, 0% down. It's a great product, and our veterans deserve some of the perks that come with that, like no mortgage insurance.
Right.
So, if you're not a veteran, you're not going to qualify for VA, but a lot of first-time home buyers, we're looking at FHA and conventional. And
FHA, conventional.
Yep, conventional. If it's your first house, you're looking at the average I see is 3 to 5% down.
When do you, I know that this depends so much in the situation, but
Yep.
Conventional versus FHA.
So multiple things go into it. Obviously, if it's lower credit, we're probably leaning towards FHA. If we can get it to qualify with both loan programs, I'll run payment options on both and present it to the client. A lot of times properties might have issues in the price range that people are buying it at, like chipping paint, siding damage, whatever it may be, that if we go FHA, we know that's going to come up on the appraisal. If we go conventional, we may not have to deal with, the appraisal remarks. So every situation's different. I think the cool part about us, and, we dive into a lot on the front end. We're going to explore the first-time home buyer's needs, wants, and goals. And, if there is multiple options for them, we're going to present both them and let them make an educated decision on it. So,
Conventional. What does conventional entitle, and how do you have that conversation with a first-time home buyer with private mortgage insurance?
yeah, so PMI on FHA, they just did announce they're going to lower the mortgage insurance monthly.
I did see that.
So that's huge.
How does that affect the average consumer? Your
So,
first-time home buyer.
yeah, on a $275,000 house with 3.5% down, it'll save you $66 a month. So, I mean, that can be huge. It can be a difference maker for first-time buyers especially. So, when we're comparing FHA and conventional, FHA, they're going to roll in upfront mortgage insurance premium to the loan right away. So, it eats into some of your equity right at closing. And then that mortgage insurance is on there for the life of the loan. Compared to conventional, that mortgage insurance is going to fall off at 78% loan to value. So if your value's at $100,000, once you pay your loan down to $78,000, that mortgage insurance would fall off.
Okay. Well, how could somebody benefit from that specific?
So conventional, you have the opportunity to get that dropped off. If you have an FHA product, you're going to be paying that mortgage insurance for the life of the loan unless you refinance over to conventional and you're at that equity point. But, some people, if it's 3 to 5 years and you're putting 3% down on conventional, 3.5% on FHA, it's really not a huge thing to worry about because they're probably not going to pay down their loan that much in the first 3 years. If they're selling the property, that's not really something to worry about. But for long-term hold properties, it is something that, we need to dive deeper in and let them make a educated decision. So
for FHA, what do you see as the most common strategy? What are you advised to?
FHA it allows us, if we are tighter on debt to income and we can get an approval going FHA, but we can't conventional, it just allows us to get maybe some trickier situations approved. There are situations where FHA is the only option that we can go. So we just need to dive in, and there's really no strategy to it on our end besides, is it what's best for the buyer? Is it the only route we can go? And we need to explain that in detail to them so they know exactly what they're working with.
Do you have buyers struggling to get financial approvals?
Definitely some, and that's why I would always recommend, if you're looking to buy a house in the next 12 months, the earlier you start the process, the better, because if there is something that we can fix, as far as credit, as far as the amount you have saved, a job issue, we have time to fix that. Where I see the biggest issue I see with first-time buyers is, they jump into it, they find a house they love, and then they go to get approved, where that doesn't give me as a lender a lot of time to fix something if something needs fixed. It might be okay if your situation's good, but the more you understand, the more we can get squared away, the earlier. It's better for you, it's better for me, and it makes you more confident and comfortable with your buying decision.
Would you suggest that people start looking for, lending advice, mortgage options, talk to professionals a year prior to they becoming a homeowner?
Absolutely. I mean, I think that's a no-brainer. Everybody loves a house. They want the house. Nobody wants a mortgage, right? It is what it is. But the earlier you talk to someone and the more comfortable you can get with the process and the financing piece of it, when you do find that right house, it makes it so much easier and such a better experience for you.
What do you think that first-time home buyers don't understand, although you explained it multiple times? What is some of those more hard to get concepts?
Yeah, I mean, first-time home buyer, one thing that you need to know is, or that I run into a lot is, how much money am I going to need to spend up front? So within the first 3 weeks of the transaction, you can expect to pay for the appraisal, any inspections that you decide to do, and then earnest money, which goes towards your down payment. So those are the 3 things that you can expect to pay for up front, and then what's remaining is called cash to close. So, you're talking title fees, the rest of your down payment, recording fees, your first year of insurance. So the biggest misconception out there, or one of them, is that buyers think they need to have, that payment right at the time of approval, and that's just not the case.
Do you think that's why they don't necessarily? Do you think that's why you are not the first person that they approach?
Yeah, I mean, it's scary, right?
Yeah.
Financing is scary. You don't want to get taken advantage of. I think that's a common, theme out there, that they think someone's just going to take advantage of them. And after '08, I mean, we have to follow so many guidelines, which is good, right? We need to make sure that we're approving everyone that we can under the guidelines that the government provides. I think it's just a big, scary thing for first-time buyers. I don't know if you work out, but it's the same thing as working out. When you haven't worked out ever and you look in the gym and you're like, it's scary, right? It's scary to show up and go and learn more about it. I think the same thing with financing. It's a scary thing if you don't know anything about it. And until you talk to a professional that's going to have your best interest in mind and understand your goals, wants, and needs, it can be a really scary thing. So I would just encourage you, talk with a professional, whether it be me or another local lender. I think you'll get a lot out of it if it's someone that's professional with you. So
how do you define from your perspective, from a lender perspective, how do you summarize the home buying process and bullet points?
Yeah, so I think you should get pre-approved first. You need to know what you can afford, what you're comfortable paying, understand the mortgage process. I collect all docs up front, so we look at everything, so that's first. After we get you pre-approved, if you're already working with an agent, we'll get that pre-approval letter over to the agent so they can actually take you into houses and show you houses. Once you find a property, you submit an offer. If it gets accepted, there's going to be some negotiation, most likely back and forth. After that gets accepted, usually within a few days, you're going to have to put earnest money. And the best way to describe earnest money is to think of an apartment, your security deposit. You put that down. It shows that you're serious about the lease that you're about to sign into. Same thing with buying a house. It shows that you're a serious buyer. You have some skin in the game, and you don't get cold feet and back out. If you were to do that, most likely the seller's going to keep that money because, they're opening up their house to buyers. They're packing up. They got moving trucks coming, so they're planning a lot on their end. So the earnest money, it has some skin in the game for you as a buyer. The good part is that goes towards your down payment at the end of the transaction. After that, you're going to sign your loan documents. I go through every loan estimate with every buyer, which we should in our job, just to explain everything in detail line by line so they understand what they're getting into. And then we package the loan up, get it ready for underwriting, and we order the appraisal at that time as well. The difference between appraisal and inspection is for buyer's knowledge. That's for any major issues, non-cosmetic in a property. Appraisal is ordered by the lender to confirm that the property is valued at what you're buying it for, to make sure that we're not over lending and the property is safe and sound for you to move into. After the loan gets approved by underwriting, there's going to be remaining conditions that we get from the buyer. After we gather those, after the appraisal comes back, and after title work comes back, we resubmit that loan for a clear to close, and then closing day happens where you sign all the documents. So that's in a nutshell.
And then boom, the house is yours.
Yeah. And then you're building wealth.
That was actually pretty good. It was detailed.
Yeah.
Did you study this? Do you
I've
do it for a
done
living?
this. Yeah, right.
So now let's take it back. I want to learn more about the story on how you became a mortgage lender. How does that come across the table?
Yeah, so in college, my roommate at the time had graduated. Nate, he worked at Wells Fargo, and my senior year, I was, looking for jobs, and he, recommended that I apply at Wells Fargo. Interviewed for the job. Didn't have any mortgage background, so obviously it was scary to apply for something that I had no knowledge of. Got the job and just dove into it 100%. Learned a lot. Wells Fargo was a great place for training. You get a lot of opportunities, a lot of conversations. But I decided I wanted to go out on my own. It was more of a call center type feel, and I wanted to go out on my own. I thrive off relationships. The best way to describe a lender, are they transactional or are they relationship based? I'm relationship based because I'm looking at this long term, and that's where I thrive, is building relationships, creating friendships, and really working hard for my clients to create a lifelong client. So where Wells Fargo is more transactional and you're on to the next one. So got into it. I've been managing Key Mortgage Group for a few years now. We have 5 loan officers, and I just really enjoy what I do. I've met a lot of awesome people in real estate. A lot of friendships have been gained, and I've learned a ton about myself, about building a business, and I'm just kind of addicted to the business side of it.
From your perspective, when do you find real estate investing something that you want to do?
I'm already investing in real estate. So I have a single family. I've flipped a property. I have an apartment complex in California, and then just recently an escrow on an apartment complex in the metro. So I'm moving away from single family investing to multifamily. I just think more doors is less risk. But
100%, I agree with you at all.
It's just something I've always wanted to do, and it's a great way to build wealth. As long as you're underwriting the property, correctly, I think there's a lot of opportunity to build wealth and leave something behind for my family. When I'm gone.
And this is a different conversation, but I totally agree with you. Multifamily is just like that next step of investing.
Yep.
Right? How does commercial real estate knock on the door for you?
So commercial real estate, it's so different than residential.
So different, yes.
And that's something that I've been doing residential for so long. It's kind of eye-opening to me. But
how do you find commercial versus residential for the people that don't know?
So commercial, more than 4 units.
So 5 plexes and above.
Yep.
Anything there.
5 plexes and above. So multifamily, obviously, the reason I like investing in that is because you have more rents coming in. If you have someone that doesn't pay, it doesn't impact you like a single family. If that person doesn't pay, you're out that money for that month. So, it just mitigates risk. Obviously, there's more capital raising involved. That's, a piece that I've learned is, you got to have a good network of people that trust you and, they want to invest in real estate too. And, we've been able to do that with a close friend group that, we're always looking at properties. We're always underwriting properties. We use Michael Blanc's deal analyzer to make sure the deal is going to work. Because last thing we want to do is, raise capital and not do a good job for our investors and ourselves. So we need to make sure the deal is going to work. We're very conservative on our underwriting, so we look at everything to make sure it's going to work and get our returns for our investors.
I see. Would you advise against or for going into commercial real estate without having a residential background?
I think residential helps. It's a foot in the door. You can get into residential for less capital. For example, like we talked earlier, the 4-unit property going in with an FHA loan, 3.5% down. That's not a lot of capital for the opportunity that's there. So, 4-unit, we still count that as residential, but, single family, I have a single family home that cash flows very well. It's just got to be the right fit for you. What's the setup like? Mine is, I rent out 4 rooms to college kids. They pay per room. I think that's fair. It's the same way it would be on the dorms and apartments on campus. Great renters. I've had no issues with them, and, we're fair to them, and they do a great job of taking care of the property.
And this is a strategy that first-time home buyers could also take advantage of, house hacking.
Correct.
Right?
Yep, absolutely. So if you're a first-time buyer, you are signing documents at closing that you're going to live in the property for 12 months. So that's important to know. You can't just buy it as a primary residence, get primary financing, and then rent it out. A lender does expect you to live in the property for at least 12 months. From tax purposes, I'm not a CPA, so I'm not the right guy to talk to, but you're probably going to want to live in the property a little longer to get the tax benefits from it.
Yeah, offset some of those things.
Yep.
How can people reach out to you? How can people, have a consultation with you? I want to learn more about, I'm a first-time home buyer. How do I reach out to you?
Yeah, reach out. You can go to my website, louislens.com. I have multiple things on there where you can reach out to me. Social media, that's huge for me, on Instagram especially. Shoot me a message. I love talking real estate. Any questions that you have, whether it be for investing or for a mortgage of your own, I'm always there to help. What I want to explain to people is a lender's not just going to pull your credit. Let's dive in and have a conversation first.
That's what most people think,
right?
Though.
Yeah, they think my information's out there, my credit's getting pulled. And that's just not how I operate. Some lenders do, but, I want to make sure that you're comfortable working with me and that you feel I'm a good fit to be your lender before we move forward with anything. And I think that's important because we got to break that barrier, because first-time homebuyers especially are scared of the process. So I always break that barrier, figure who they are as a person, what they're looking for, and what's important to them before we dive into anything. So,
Fair enough. That brings a really, really good point. The relationship over the transaction.
Yeah,
Yeah.
relationships will always win. Transactional in certain markets might win, but relationships will always win.
And that it's awesome that you have this experience not only with residential but also with commercial. So if people had a bigger ambition, like they wanted to start with residential but eventually take on commercial, you could be a great candidate to advise because you've done it yourself.
Yeah, absolutely. I can just tell them what I've learned from it. We pay for coaching on that side of it as well, to learn more about commercial and syndications and how to analyze deals. We've had to learn a lot. My partner Garrett and I, and I can only explain to people what I've learned from it. I'm no expert yet. That's the plan, is to.
You're never an expert.
Yeah, you should always be learning, and stuff's always changing. When the market changes, your strategy is going to change for residential and commercial. So, people can reach out. I love chatting real estate, anything real estate. I'm always down to talk about.
What's the best advice, real estate related, you've ever been given?
Don't try to time the market. Time in the market's better than timing the market, in my opinion, especially with real estate. Real estate long term always wins. So
time in the market is better than timing the market.
You got it.
Yeah.
Got it. And that's with any investment, especially real estate. What I can tell people right now is, let's say you want to wait for rates to come down. If you wait for rates to come down, we already have a low inventory environment. The reason it's slowed down is because buyers are spooked. Everybody's kind of spooked right now. But if rates drop drastically, the amount of buyers that are going to re-enter the market in a low inventory environment, it's going to be the same thing as 2020 and 2021. you're going over asking, you can't get any concessions, and you're putting in 20 offers on houses before you get one accepted. So, I think right now is a great opportunity to get into real estate as long as you're comfortable with the monthly payment. And that's what I always go back to. Are you comfortable with the payment?
Yeah, that should be the main focus. Not the
For sure.
taxes, not the private mortgage insurances. Like, can you make the monthly payment?
Yeah. And not only can you make it, because on paper you might be able to make it, but as a lender, we don't know your lifestyle. What kind of life do you want? You don't want all your money to go towards your house. So I always challenge people, think of two things. What have you talked about what payment you're comfortable paying? And if the perfect house popped up, would you be comfortable going a little higher than what you said you wanted your payment to be? Because if the perfect house pops up and it's $150 more and you're comfortable paying that higher amount, you're comfortable making an offer on that property. If you have a set amount, I have to be under this, then our parameters can be pretty tight on what you can qualify for.
I see what you're saying. Wow, that was a lot of information. I hope you guys found this valuable. Thanks so much for coming.
Yeah,
really appreciate it.
absolutely. I really appreciate it. It was awesome.
That was a lot of information. There's gotta be somebody that might find this helpful.
Yeah, absolutely.
A lot of people.
Absolutely.
If you made it this far in the video, please hit the like button and subscribe. We always appreciate it. And like always, I'll see you guys on the next one. Thanks for coming, man.
Appreciate it.